Hi, I'm Catherine Wycherley. I'm a journalist at PrivSec Report, and I'm delighted to be anchoring this session, a conversation with Payson Johnston, CEO of fintech company Crowdz. Remember, you can still explore the platform using the menu bar on the left and connect and network with peers through chat and elsewhere on the platform. But for now, I hand you over to Anton Zdziebczok, CPO of NorthRow, who is hosting the session. Anton, thanks.
Hi, thanks for that, Catherine, and welcome everyone. As Catherine mentioned, I'm Anton. I'm the Chief Product Officer at NorthRow, and I'm really excited to talk to you all today. For those of you that don't know, NorthRow is a technology company helping financial services firms navigate the CDD lifecycle from onboarding through to ongoing monitoring to remediation and offboarding. NorthRow combines best-in-class data with flexible business logic, intelligent identity detection to help you get people and businesses through your compliance lifecycle in a smarter, faster, and more automated way. One of the companies that we help here at NorthRow is Crowdz, and I'm here today with Payson, the CEO. Crowdz is a super interesting business based in California in the US that takes an innovative look at invoice financing in the SME market. Crowdz helps digitize and automate the invoice process, provides a better way for SMEs to generate liquidity. So Payson, why don't you start by telling us a little bit about yourself and then about Crowdz?
Great. Hi, everyone. My name is Payson Johnston, the CEO of Crowdz. We're located in Campbell, California, which is in Silicon Valley. It was great to be included in this, and thank you, Anton, for the invite. A quick thing about Crowdz. Crowdz is a global marketplace for invoices. It allows SMEs to sell their invoice into other funders on the platform. Built on top of that is a risk scoring system that scores all sellers and their customers in real time. And then we are focused on helping that seller really what we call reclaim the future and improve their cash flow really so they can survive and thrive. On top of the platform is also a white label system that we've white labeled to several enterprises and others that can be co-branded. And those companies can roll out supply chain finance programs to their customers or to their merchants. So that's a really quick overview of Crowdz overall.
That's awesome. So thanks for that, Payson. So what was the light bulb moment for starting Crowdz? What was it that kind of motivated you to begin in that business?
Yeah, I come out of the background of supply chain, Cisco supply chain, managing different supply chains, application development, managing DRAM, optics, contract manufacturers. There was an event in 2011. It was the Japanese earthquakes and the Thailand floods, both happening in the same year, that I had supply chains go down. Literally, one went down because of the nuclear reactors in Japan. The other one went down because of manufacturing sites going underwater, literally. And at the time, my co-founder and I were actually on this project team to recover this disaster. Post the disaster, we started looking at ways to look at risk in supply chains, look at how insurance was deployed and how slow it was deployed, and how companies literally went out of business during these times, and started getting into the area of how supply chain finance could fix it, and realized it was more of an industry problem. And then we developed Crowdz around fixing that problem. Really, how do you deploy supply chain finance to the smallest company? How do you do it at a global basis? And really get insurance options and money to companies fast so they really can survive and thrive in whatever environment be, whether it be the COVID environment, whether it be risk environment, or just a regular operations environment that they find themselves in.
Okay, so it was sort of a genuine full-on global sort of insight that made you take that leap into it. And how have you found the journey so far, coming from kind of like firms like Cisco, where it's a bit more of an established business and an established field? How have you found that being kind of smaller player startup in that financing industry?
Yeah, I mean, startup world, for those of you who have been in it, is quite exciting and exhilarating. I mean, it's like you get a natural high out of just driving new deals and developing new stuff from that standpoint. It's not without its perils and tough spots, but it was in 2018 that we caught the eye of Barclays and the Techstars accelerator out of London. Moved my family into London for 6 months, worked through that accelerator. Chris Adelsbach, who was the managing director and now runs Outrun Ventures, was our our key kind of inspiration there, and connected us into the Barclays ecosystem and other ecosystems, got us funding, and got us really thinking about what was missing in the elements of supply chain finance, trade finance, and invoice finance, really that could be automated, et cetera. And so that was really kind of the catalyst for us moving. One of the things we experienced during that time is we ended up launching our platform in November of 2019, pre-COVID, started getting good traction, 200-something companies coming into the pilot. By the first month of COVID, got into 450 companies, and today we find ourselves with 27,000 companies on the platform. And it really just, this massive growth and expansion of companies needing cash really to survive, right? And then to grow their businesses. We find a lot of cases, companies will come in, they need cash at a certain time, and they needed cash for expansion. And one of the things different than government programs that really looked at past expenses and were helpful, really trade finance, supply chain finance, or what we refer to as invoice finance, is used really to align the actual orders and revenue to a company's raw materials, to hiring back workers, to the capital needs they have, and growing their business in a post-COVID environment that's really needed, aligning to actual business versus past expenses that the business may not have come back. So those are kind of key things that we found and experiences that we've gone through in this journey.
So it's about finding kind of a more suitable set of funding going forward that's more aligned to how a business might be out of a kind of transitional event like COVID, rather than how the business was beforehand.
Right. One of the things, supply chain finance and in the area considered factoring, right? Some of it has been known for only being used for distressed companies in the past. So if you were distressed, you would go there, you sell your whole book, you would pay exorbitant fees, and basically you would try to, hold on and get your business back together. One of the things we've seen as a shift, and one of the things we're working with companies to shift on, is really the area of invoice finance and trade finance can be used for more of a catalyst for growth, and more of how do you manage working capital on an ongoing basis. If your company is doing great, if your company's not, every company, large and small, and I've talked to companies from Ford to Cargill to Barclays, they all experience like these different ebbs and flows of risk. And so if you're a smaller company, a medium-sized company, you experience that, but just greater magnitude, and you might not be able to survive during different times. So they're having a solution that you're already pre-qualified for, that you can sell an invoice in anytime, not your whole book, but just as you need to do, improve your working capital alongside credit and other things, is really, what we've seen is where supply chain finance and invoice finance is shifting into the future.
Okay, so putting a bit more of a positive spin on an industry that's kind of traditionally been, as you say, sort of maybe viewed as a last effort or not the most desirable way of funding a business, but really making it part of that BAU routine and leveraging those assets you have in a business for benefit. That sounds like a really sensible approach. So touching on one of the points you talked about earlier, kind of like a really massive accelerated surge in demand for your services as a result of kind of this slightly peculiar world we're all living in at the moment, both of us doing this from our offices and living rooms as opposed to from the hotels or the conference centers as we would usually do. Have you seen a particular increase in kind of Fincrime or potential Fincrime as a result of that? And how do you see kind of fintech and regtech coming together to help SMEs battle this? Because I mean, certainly I've read the articles and I've read the input coming in certainly from the UK about sort of people taking advantage of these bounce back loans and maybe not treating them in the way that they should have been, excessive fraud activity for people trying to, get involved in those when they don't have businesses to support that. Have you seen much evidence of that?
We've seen that in general. There has been somewhat of a surge. I mean, there's always fraud and fintech crime that happens, right? Where there's money being offered, you always have fraudsters coming. And so getting to more advanced ways of looking for things, from data sources, from looking at patterns of how people behave to, there is a certain way that a lot of Fincrime happens. Sometimes you have more legitimate players making mistakes and you see that, but you do have some more sophisticated stuff that happens where people are creating fictitious accounts and trying to establish credit patterns. But, tying into companies like NorthRow and others that we work with, from a data standpoint is really the way we're getting ahead of this. And we've got sophisticated, doesn't mean we're perfect at this, but we're looking at ways to automatically check on behavior of companies over the long run. And like one of our scoring systems, what we call the SURF score, Sustainability, Risk, and Financial Score, looks at how somebody comes on from a KYC, KYB perspective, then looks at AML and anti-money laundering, looks at fraud type stuff at the beginning, but then looks at patterns of risk over time. Like, what are they doing? How are they using this? What type of customers are they bringing on? And, trade finance or invoice finance is a really interesting one because you're bringing the invoice, and so you see a pattern of how that company is behaving and the companies that they're doing business with. And you can start to see, are these duplicate invoices coming through? Are these other factors? And so that's how we see things kind of changing. But Fincrime seems to always be there wherever money is, right?
Yeah, I think that's natural, right? Whether that's Fincrime or whether that's crime generally, like sort of it's always where those big gambles in money can be had. And I think that's an interesting point you talk about there, sort of looking at different data sets and thinking about it more as a kind of less as a transactional one-off activity and more as something like a life cycle. I mentioned that in my intro to NorthRow earlier. We're really big buying into the concept that CDD and due diligence and KYC and AML isn't just something you do at the start of the process. It's something that evolves and changes. Your customer changes over time. And I imagine that window you get into through seeing the invoice financing that's happening and their dealings with customers is going to give you a whole bunch of intelligence that you wouldn't have otherwise. So that's a really interesting point. We've had an audience question that I'm just going to ask before we move on to the next set of topics. So the questions come in: what sort of Fincrime risks have you come across since launching Crowdz?
Yeah, certain risks. So you always have your standard, creating a fake profile, which you can tell pretty quickly, right? I mean, that's your easiest one. We have seen people then try to establish credit using more real profile information, and something in the pattern doesn't work. Something like the phone number doesn't check out. The address is, and nowadays in COVID it's a little bit harder, but the address is somebody's house, right? Or other things. And pre-COVID, that was a good giveaway to business. Now that's a little bit different. Things such as trying to load up an invoice that might have been financed already. That's something we've seen and we watch for very closely. And then and we do verification checks with companies that the invoices are going to as well, and things like that on the back end to watch with us. And then other things of people like to just get in and try to move money around. And so we use certified and regulated partners that move money. And we also work with insurance companies as well. And we're exchanging data back and forth of what they're seeing. Do they see this as a legitimate company? It's always a red flag when a company has been established in 3 months and no one knows about them. Startups are around, and so we're very relevant to that. But that's an interesting one. Somebody just creates a startup or a company and then starts trying to finance invoices, right? And so finding out if the insurance company or if our other providers have ever heard about them, if they have any flags. We check a lot of fraud databases, et cetera. So those are the things we've seen over time.
Awesome. Thank you for that. And there's another audience question that I'm going to come on to in a minute. I just wanted to sort of ask something that was something I thought was particularly interesting. As a kind of exchange and marketplace, you have the maybe dubious honor of having to deal with both buyers and sellers. So do you find that you sort of have quite different risk profiles with both sides of that party, or are you finding that those businesses are quite similar in terms of what you need to do in order to mitigate that financial crime risk?
Yeah, in our model, we actually have 3 players in our marketplace. So you've got the seller of an invoice, you've got their customer, and then you have a funder who's buying that invoice, right? So there's kind of 3 players that are mixed. We're not in the peer-to-peer funding right now. We've thought about it, but it's not something we've moved into. We're both into more institutional funding and business-to-business funding other businesses. That's kind of our checkpoint and our gate that we've used on the funder side to date. On the buyer, who is the customer of the seller, we see some interesting stuff come up, but we're looking at profiles. For instance, one of the things we like to do is our risk data goes across sellers and looks at customers on how other sellers interact with them. So we're looking for patterns. We also find there's some kind of unsophisticated financial crime that tends to use illicit or illegal words inside of some of their sales and invoices and stuff like that. So we're always watching for that, things that are not, guns, drugs, etc. Watching for that type of comments back and forth on the exchanges that are going back and forth between parties. So those are kind of things that we look at.
And I guess also that's another dimension you have to deal with as a global business who's not just helping SMEs in one sector or one country, right? You're going to have those scenarios, I guess, increasingly as you grow as a business, where you're able to support some types of businesses in some markets and not in others. So it's about having those rules that are kind of localized and personalized to those sectors that you're doing business in.
Correct. Yes.
Awesome. So thank you for that. So the next audience question was, given that invoice and trade finance products are quite complex, did you have to hire specific Fincrime and risk talent to support the journey? And if so, how did that talent feel about working in a fintech versus a bank?
Yeah, that's always interesting, the bank versus fintech. So I've had people do a very successful transfer over from bank and fintech, and I've had other people, like a certain environment, like they operate in the bank better than they do on fintech. So it's more of the type of personalities and others that you're hiring for that. We've had to actually hire a lot of different people on the risk side. We partner with companies like NorthRow, but we've also hired experts in the area of risk, in the area of banking, in the area of fintech, in the area of product development. And that's been a really important piece. And we continue to build out our teams in that as well, looking at more sophisticated ways to look at where the risk is in the chain, both fin and just fin crime risk and just risk in general, right? So
yeah, absolutely. I think that's a reflection. I think a lot of fintech or regtech businesses would be able to go and validate those comments on. I think it suits some people really well, and other people kind of enjoy that structure and sort of more of this standard environment you're going to get in the banking industry. So as a business and as a person who spent time kind of both in the UK fintech startup scene and more so recently in the US. What would you say the difference is kind of between those two markets? Did you, when you were over here in London, in the Barclays incubator, did you notice much difference in kind of the state of the startup fintech space over here compared to where you are now? Or would you say they're kind of a relatively level playing field?
Yeah, it's an interesting thing because in Silicon Valley, and I've spent some time in New York too, in Silicon Valley, it's more deep tech and other type of things. It's less on fintech. Areas of blockchain and things like that. There are certain VCs that support it and certain VCs like hate it, and some do fintech, some don't. It's just an interesting thing. In London, I find, insurtech, regtech, fintech, that is the scene in London. And there's a very small community in London. I mean, it's large, but what I mean is small, is you've got an interesting combination in London between the startup scene, the enterprise scene, the government, and the academic scene, all within, a few miles or, between Cambridge and Oxford. A lot of interesting thing going on. When you take the US, you've got Silicon Valley where the tech is, you've got fintech. I mean, you've got more fintech and financial in New York, you've got government in Washington, DC, and you've got academic all over. And so it's just it's a distributed scene versus in London, it's all together, all interworking, all people interacting, and it's a different environment, very focused on the fintech environment in London versus Silicon Valley. An investor will be investing in AI, they'll invest in deep tech and robotics and autonomous vehicles, and then maybe fintech, and they'll have a really strong position on blockchain of I hate it or I love it. Is this really, or I don't know anything about it. It's really interesting. In London, though, it's a different scene. So,
yeah, okay. I mean, I'm always amazed at how polarizing the topic of blockchain is, right? I think when you strip it down to what it's trying to achieve, there's no reason for it to be as polarizing as it needs to be. It's an incremental improvement on the concept of a database. There's nothing super polarizing about it, but I guess that's how you form opinions. So we've had two more questions from the audience, which I'm going to ask. So the first one. What regulatory and compliance hurdles has Crowdz found particularly challenging to date?
Yeah, the global regulation changes per country, and so that's a particular challenge. in general. I mean, we use regulated providers so that they help us work through that. One of the things, we are in the FCA sandbox right now, sandbox 6, working on tokenizing our actual invoice and the movement of how does crypto come alongside the movement of fiat. And that's actually an interesting discussion and a challenge just in general because of different governments taking different positions on that. And so that is one of the regulatory challenges and why we're working with the FCA and other regulatory bodies on that.
Yeah, I mean, I think, and this is kind of topical because the next audience question is around blockchain technology. I think it's a really interesting one where historically, if you looked back 4 or 5 years ago and you thought about blockchain or cryptocurrency specifically, and that movement between fiat and cryptocurrency, you would expect a lot of people by their nature, I think, were suspicious of that activity. And so there were probably higher levels of Fincrime going on in that industry. And now as it's being more kind of used in reasonable scenarios and more businesses are starting to accept, and you're seeing more industries kind of integrating themselves into that way, I think it's going to be interesting to see how the public perception and the regulatory perception of that changes over time. So this audience question is, how does utilizing blockchain help or hinder tackling fraud in the invoice financing industry?
Yeah, so I mean, we're very pro blockchain. It's not something we sell as our main solution, but we've built on Ethereum since 2017. So, half a year after it went into production, right? So we're very pro Ethereum. We don't move value on chain right now yet, meaning we don't use crypto, but we do use a smart contract, and we are tied in to that, registering on chain exactly what's happening from a transaction standpoint. We will shift to crypto as the regulatory bodies allow us, and our investors like Barclays Bank and others basically give us the okay. But the one of the things we see on where things are moving in terms of fintech, if you think about, and this is kind of a interesting standpoint. If you've actually implemented in the fintech world actual payment systems, it's quite cumbersome as you go from global to global, and the fiat movement and the tie-ins, everything from Stripe to PayPal to all the smaller players, it's a very paper regulated industry. And crypto starts to actually move that, and the blockchain moves that shift in an interesting way where you can combine documents and payments together and start to bring those together in a very sophisticated way that can't be done through FTP and the rails between banks and other things. So we see that as an interesting shift. The other thing on the invoice side, one of the things we see is missing is that right now invoices remain in public or private databases. So you can't do cross checks across a lot of databases. And we see over time the writing to invoices on chain from the origination and the shipping information all the way towards if that invoice was sold and paid for, and if it's existed before, on chain is actually a radical change in invoice finance. It will help the Fincrime be reduced quite a bit when it actually moves to that. So there's a lot of time, blockchain gets hyped, and Bitcoin nowadays is up again, and people use it as an investment vehicle, but you're not really looking at kind of the projects of Ethereum and how smart contracts work, and whether it's Corda or Hyperledger, and how people are actually using it for business process by combining the data movement with the actual money movement. It's quite powerful from a reconciliation standpoint for companies. So.
Yeah, and I think something like invoicing is a great context for that, right? Because you don't expect invoices to be something that change that much over time. You might get credit notes or slight variations in them, but they're something that tend to be kind of issued and settled, and they stay relatively static within that period. So they make a great context for that kind of distributed public record of it. So thanks, that's some really useful information. I've got one more question on my list, and then we might have time for one more audience question if there is it.
Okay.
So I don't think you can have any conference at the moment without talking about what the future might be in a kind of post or maybe living with, as opposed to post-COVID world. There's a better way of describing it, because I think it's too early to tell if we'll ever be post-COVID really. How do you think this is going to affect compliance in AML? I mean, certainly as a business, we've seen an increase in demand for kind of digital identity validation, for the ability for people to do remote verification and remote onboarding. We've seen, kind of a phase change increase in the demand for that. and onboarding journeys moving more to kind of digital onboarding journeys than kind of halfway houses that they've seen before. What's your opinion of how you think that's going to get affected? Do you think it will be affected by COVID, or do you think we'll kind of go back to what we were doing beforehand?
Yeah, I do think digital verification and not having to go somewhere or sign paper documents, which is what the industry does a lot of times in order to say that they're verifying, which I actually believe can be very easily faked as well. So I think moving towards taking some of the ways that KYC and KYB has done in the crypto world, liveness checks, the ability to double check, if the person on video matches the picture, matches a date that they're saying, et cetera, that's an interesting change. The ability also, and you pointed to this, a lot of banks look at KYC and KYB and AML as a process, and then they're done, and hey, they're great. But the ability, fraud nowadays is getting more sophisticated, where they build credit profiles that get past some of those gates, and you have to look for patterns over time. And so I believe, how do you check that on an ongoing risk basis is really, really important. When something happens that should go against people's risk scores, right? Whether that how they're doing payments, whether that they're bringing a provider that actually, or a company that actually has a faulty risk profile that they're doing business with, it should start flagging, and investigations should start going in. I think that's where Fincrime is going to shift to more of a real-time, ongoing checking of what's going on, and not just onboarding companies and then they're great and they can do business with us. So.
Yeah, I think that's a really good point you've made there, because I think you can just talk about, let's use Crowdz as an example of this, right? If you were somebody who Crowdz was a supplier or a customer of, if you think about how your risk profile has changed from when you launched in November to where you are now, right? The number of customers you have, the revenue, the turnover, the number of staff, the public importance, how it's perceived in the media. I think your profile, you just as an example, would have changed so much from when you were onboarded, that I think it's for me, it becomes table stakes at some point, where it's not kind of optional to be thinking about it as more of a kind of living and breathing thing than it is now. I think it just becomes mandatory, because otherwise you're going to find yourself, like you say, in a situation where businesses are changing so rapidly that how you onboarded them and your risk and your view of them when you started is going to be so radically different from where they might be now. And the kind of traditional, let's check every year, or let's check every 2 years, or let's check every 3 years, might just not be enough anymore. So I think that's a really interesting point. We've got 2 minutes, and I do want to just say a quick thank you before we finish off. I guess the last thing I wanted to do is just sort of thank you for your time. It's been a really interesting discussion. If anybody would like to know anything more about either NorthRow or Crowdz, you can visit northrow.com or crowdz.io. Thanks for your time. I know obviously it's kind of early in the day for you and a little bit later for us here in the UK, but we thank you all for dialing in. And yeah, any questions, we'd love to hear from you. And thanks for your time, Payson. Really, really helpful.
Great, Anton. I really appreciate your time today, and look forward to continue to work with NorthRow on this whole process.
Excellent. Thank you.
Thank you so much to Anton and Payson for that fascinating session. I'm sure that we all gleaned a lot of insight from it. I know I did. Next up, we have our last session of the day after the US election, which is discussing the impact of the recent US election on the international approach to tackling financial crime in the near future. So thanks ever so much for listening in, and join us in a few minutes.